Good morning, Jags. This is Fahad. Today is Tuesday, August 18. Let's get started. Let's start off quickly with Amazon. As I mentioned in the chat room as well as in Chartology email last night, that this has a setup for a technical breakout through $3,200 per share that could be rather explosive. And interestingly, this morning, the news is out that the company is going to be expanding its headquarters to 6 cities now. And as a result, they're going to be hiring 3,600 new corporate headquarters employees. This is a pretty big expansion plan that Amazon is putting out. I believe, and don't quote me on this, I have to check, but I believe the company has currently on 2 headquarters in the United States, but they're going to be expanding that to 6 different cities. Naturally, that means more jobs and everything. Now, this is the kind of a news that doesn't necessarily have any kind of impact on the financials of the company for any matter, but optics matter, right? Optics matter, news flow matter, and these kind of growth stories could potentially simply add to the positive case for Amazon for quite some time to come. So with that said, this thing is actually taking out $3,200 resistance in pre-market. It went as high as $3,222, pull back slightly just above $3,200 per share in pre-market. Let's see if this thing actually breaks out through this resistance. And if it does, watch call options, particularly short-term weekly call options. See if they could actually catch some flows, and we could see this thing spark higher sharply, going all the way to $3,400 to $3,500 per share. So that's a quick update on Amazon. JD.com, which had a beautiful breakout yesterday, and I covered this in conversations yesterday. This morning, Goldman Sachs is adding to its conviction buy rating and raising the price target to $85 per share. Yesterday, a bunch of clients were asking in the chat room whether we should be taking profits, and I said no, this is not done going up. And I also mentioned towards the end that this thing likely goes to 75 to 80. I'm sticking by that. I think you're going to see this thing go in that direction, so continue to stay long. And you can see the massive breakout that happened, the power candle that happened yesterday on those very, very heavy volume. And this is a sign of major accumulation patterns in the stock after MACD and RSI have corrected. So there's more upside ahead. Look for this to gradually get towards 75 in short term, and then you can roll position or take profit and call options. So there is that. Now I want to discuss just a general theme on housing, because Home Depot also reported a remarkable quarter this morning. And Home Depot is out with 23% comp sales growth for the second quarter, which is just absolutely monster. 23% same-store sales growth, and that stock is nicely guided higher. I mentioned yesterday it faded a little bit with the rest of the retail sector, but it's still higher than where it closed yesterday. And I mentioned yesterday in the chat room that for those who were holding the 260 strike call options in the August month, to roll those out to September 300 to peel some profit while staying bullish going into earnings. Now, and similarly, if you combine that view with LB/LBS, which is the random length lumber futures, you can see the huge monster rally that continues. Now, adding to that, couple charts I want to show on the housing sector. So this is the one that comes from Redfin, talking about home sales prices are climbing steadily upward. You can see that the gray line is 2018. Then take a look at the 2019. You can see there's some seasonality. Naturally, the home sales patterns pick up starting from early springtime, so mid to late February. That's when each year we see, sales patterns start to improve, and as a result, prices start to push higher. Prices continue to go higher through summer months, and a lot of the deals for homes, new home sales, they are or even existing home sales, that generally tend to close before the school starts, and as a result, the prices taper off. So these are regular seasonal patterns. But take a look at what's happening in 2020, particularly, and if you break this data down further from Redfin, and if you look at this MLS data by suburbs, you will see huge driver of this price increases in median sales prices for homes is actually the suburbs. People moving out from from the urban locations such as New York City, LA, which are starting to become ghost towns in so many cases, and they're moving into suburbs, pushing the prices higher. So 4-week moving average hit a record high, up 9% year over year already as of August 2nd. Now, continuing into that path of discussion, there is one home builder which started to take new leg higher rather recently, just yesterday, and this is LGIH Home. LGIH Home. So I'm adding this to my watch list because this is a perfect bounce off the trend support after a recent pullback. All right, MACD and RSI have corrected, and if this leg higher continues, you can see the channel in this stock is open until about $130 to $135 per share over the course of next couple months. The stock closed at 114 yesterday, and so there's still about 20 points to the upside, purely as a swing trade that could be had in LGIH. So keep an eye on this one, LGIH Home. Now, with that said, and keeping this chart in mind, I'd like to read a quote from the CEO of LGIH Home, which came out in the earnings report on August 4th. And they said, despite the headwinds created by ongoing COVID-19 pandemic, a combination of low interest rates and undersupply of existing homes and renewed appreciation for the value of home ownership drove a strong demand in May and June, resulting in our highest backlog ever. This momentum continued in July, as evidenced by net orders increasing over 60% year over year. That's the CEO comment from LGIH Home. Now, similar thoughts, combining those views with what the CEO of Redfin told us on August 11. A record high share of homes are selling fast. 46% of homes sold within the first 2 weeks on the market after listing, the highest level since at least 2012, as far back as our data on the measure goes. Redfin CEO goes on to say, home sale prices were up 9% year over year to another all-time high of over 311,000. It goes on to say that Redfin agent in Orange County, California, has been pointing out material increases. Pending home sales are up 10% year over year. And lastly, the supply of homes for sale continued to fall year over year to listings now down 2.7%, and active inventory of homes for sale was down 28% year over year. So the supply has simply just removed from the market, down 28% year over year of inventory of homes, while prices have skyrocketed. This is very good for all of you guys that are homeowners like myself. And then lastly, combining that view with what Zillow is telling us, Zillow CEO told us that newly pending sales are up nearly 17% year over year, and price growth is accelerating. More new listings were added to the market last week than the week prior, but not enough to keep up with the pace of sales, as total inventory fell further below where it was last year. The strong buyer demand has been evident in both urban and suburban areas of the country during the coronavirus pandemic. Lastly, the CEO of Zillow goes on to say, that March to mid-June, there was 157% increase in the number of models created per week on Zillow website. There is a CNBC article that goes along with that, which talks about these 3D virtual tours that Zillow allows home sellers to create on its website. And so those models, the 3D tours of these homes, people that are shopping for homes, those were up 157% year over year that were created in the most recent week. So these are very, very powerful, strong trends, and they are reflective of what Home Depot is reporting with 23% comp sales this morning as well. I like this chart as a swing trade. I think this goes about 20 points higher from here all the way to $130 to $135 per share. All right, that's it from me. Jay?
Hey, Fahad. Morning. So 2 items today. First off, I plan on issuing a homepage article either later today, possibly tomorrow, on a company we've never covered before, TFI International. Ticker is TFII. It's a transportation and logistics company headquartered in Montreal, Canada. Reason why this caught my attention was that Stifel was out with a note last night with the title, "This gem is still hidden." They then go on to just say, "We continue to believe TFII to be the most underappreciated and undervalued quality company in the public transportation space." So the note caught my attention and I want to take a closer look at it. So expect the homepage write-up either later today, possibly tomorrow on it.
Excellent. Looking forward to it. Something new to learn every time. And Jay writes. Next one.
So the second one is some off-priced retailers. Specifically going to look at TJX companies, TJX. So Credit Suisse was out last night with a preview note, basically saying to expect and hear some of the strongest Q2 sales trends in the group when they begin reporting. Now, TJX will be reporting tomorrow morning. Ross Stores is going to be reporting Thursday after the close. And then if you want to include Burlington, they are going to report August 27th before the market opens. Now, in terms of TJX, Credit Suisse sort of with their one-liner preview note, just saying how TJX has the best merchandise mix by far with outsized exposure to the home category and even in preferred apparel categories like athletic and athleisure. JP Morgan was recently out talking about how their field work points to consistent outperformance in the home goods store, given the stay-at-home mandates that we've had to go through, and the lateral furniture, soft home, backyard, strong demand that we've heard from other companies. And this is also in line with what management had talked about, how the home goods business has been even stronger than their Marmax business. So I think when they come out with earnings, Q2 numbers are going to be solid, but Credit Suisse says keep an eye out for commentary on the Q3 trends, specifically related to back to school, because their industry checks suggest that the back to school is off to a very slow start for obvious reasons. In addition, they highlight that most southern states have already passed their big back to school tax-free weekends. And as a result, they still see sluggish apparel footwear sales. And then if I can just quickly show you a chart from B of A, their aggregated debit credit card spending for back to school spending is, as you can see, trending in the wrong direction. So I think when these companies start to report, Q2 sales, like I said, are going to be solid, but keep an eye out for the trends that they've started to see in Q3, especially related to back to school.
Quick question on this one. First of all, great preview on this one on TJX. But in terms of, I'm trying to wonder from sentiment standpoint, home goods section of the sales should be rather very, very strong. Home Depot earnings report is telling us we just covered housing sector. Walmart is also actually telling us similar kind of trends. So naturally you're going to see pretty robust numbers in the Q2 earnings report that will come out. But I wonder if guidance will be materially impacted by simply on back to school spending trends that are in front of us here, or they're going to be, because they happened so late in the quarter, right? So basically they were still positive year over year. They had inflected positive until the first week of July. So I wonder if management is just gonna use just a couple of weeks to materially affect the guidance in some ways, are going to continue to stay on the path of positive note. So something to watch. Not sure exactly from a sentiment standpoint if back to school matters as much. Basically, is what I'm trying to say. On a technical side too. Just the way I would read this chart. First of all, this is a very large and nice cup and handle formation. So this is the large cup and this is the handle. Second thing, when you have this cup and this is emerging out of this cup, or this handle, I'm sorry, take a look at the volume. It has been rising. So you can see when it ripped higher back in May, volume surged, and then it consolidated for a month or 2 months, volume dried up, and now it's pushing up against this major VOP resistance around $60 per share. Volume is rising again with MACD and RSI rising. So this is actually indeed a setup for a breakout through $65 basically to new 52-week high. And last thing I will tell you as you were talking is I was looking at the Jaguar scans on TJX, 71% bullish bias on this stock going into earnings. And more recently, the last time we saw a big uptick in the upside call accumulation was on June 16th, when we saw Leap January 60 strike calls were bought to open. So they're pretty much right at the money. You can drill down from Jaguar scan and see exactly what lot sizes were bought and what prices. So, you know, fundamentals, technicals, unusual option activity, why not? It may be worth the shot. Good stuff. Chronicle.
Morning, Fahad. Pinduoduo announced that it will report this Friday, symbol PDD. We recently did a video on the company, and we also covered how rural and outdoor live streaming and e-commerce has been a strong tailwind for them. The shares have consolidated recently after that monster run earlier this year, so it's unlikely we're going to see another 150% return from these levels, but I just wanted to give a preview. According to Bank of America, the latest checks from Quest Mobile shows accelerating traffic and positive returns from promotional campaigns, and as a result, they're modeling 668 million active buyers, up 40 million sequentially, and gross merchandise value of 418 billion RMB, up 79%. Meanwhile, official NBS data is showing 21.5% growth in online non-service sales. And if we factor in how the government continues to aggressively subsidize and build out e-commerce in the rural areas, which is where most of Pinduoduo's revenue comes from, I think we can expect strong commentary or guidance on the user growth side. Pinduoduo did pre-announce that the number of orders transacted on its platform was up 119% year over year during the June sales period. Like their agricultural orders were up 136% year over year, and brand e-commerce orders were up 144%. In terms of usage, daily active users were up 83% year over year to 236 million, while Alibaba saw 313 million and JD had 77. So the company here is still growing. And if we look at the July data from these charts here, Pinduoduo is seeing sequential improvement for several metrics in July, which is Q3. Looking ahead, the Ministry of Finance and Ministry of Commerce in China are currently executing a joint work plan to upgrade e-commerce, subsidize logistics costs, and streamline the rural industrial goods and farm produce industry. But given how much the stock has already run up, it's hard for me to say what's already priced in and what's not. From what I'm seeing, a lot of institutional analysts are starting to get a bit cautious for valuation reasons, even though they are still very much bullish on the fundamental picture. The risk reward here is not as good as it used to be, let's be honest, but I thought I'd just provide some color going into earnings in case anyone watched the video and they're curious about the upcoming earnings.
Quick question, and the Taobao, that's Alibaba, right?
That's Alibaba.
Yeah, and I'm looking at some of these user metrics. So on the monthly time spent in billions of minutes, looks like Taobao went straight down in the more recent months, while Pinduoduo accelerated. JD also actually had a little bit of a hiccup there.
This was a recent trend where because consumer spending is still weak in China, and Taobao's goods tend to be higher end compared to Pinduoduo, which is more of a bargaining app.
So in terms of monthly time spent on these e-commerce platform, PDD was the only one that continued to accelerate, continued to see improvement, while everything else basically sort of rolled over. And similarly, average daily time spent per user in minutes, also every one of them is down, is rolled over recently, except PDD. It accelerated. You can see over here to the daily active users in terms of millions. PDD is the only one that's holding flat, while the rest of them actually saw a little bit of a downtick. So interesting trends over here. Just looking by comparisons, PDD seems to be doing actually quite far, much better than others. So interesting update. I'm bullish on this stock based on the fantastic presentation. And folks, for those who do not know, if you're anywhere on Jaguar website, you go over here onto Jaguar Media. This is where the conversations that we do each morning, like this one, as well as a whole bunch of other things, are recorded, the video. And if you go here, you type in $PDD, you will see that, oops, let's just do PDD. Here you go. PDD, you will see that from July 27, there's video, you can watch it from here. Fantastic presentation. And also with each of these presentations, there's also presentation slides and research note, full research notes attached behind it, if you like to rather take a look at it and read it at your comfort of your home. So looking forward to what PDD will report in the coming weeks. Now, with that said, Avo.
All right, looking at Analog Devices International, ADI, this morning. They report tomorrow, as far as I can tell by my platform. And recently, the June semiconductor data came out. This was at the start of August. Unfortunately, it lags by a couple of months instead. It's June. Continued growth, far better than what we saw in 2019. And revenues, just quoting here from the report itself, revenues saw another month of growth, up 8% year-over-year basis after 2019 saw double-digit declines for the year. We all remember how the prices were depressed last year. And the RBC itself, the analyst expects more stabilized NAND pricing going forward, improving DRAM prices, and they also believe that the bottom did occur in December, and this is being helped by improved data centers, smartphone demand, and electrical vehicle content and battery management sales. Whew, that was a long one. Now, yesterday, I did see some bullish put selling in August 117 strike, though I don't see it reflected. So it might not, I'm just trying to see it on my RBC platform, which is not updated at this time. They're a little late, and I tried to check it on another one, but I just don't see it reflected in open interest. There was, it appeared to be by the price selling yesterday ahead of earnings. And also on the 12th, just a few days ago, there was call buying, which I forgot to note what strike it was, but it was bullish call buying. So, and if you recall, they did buy Maxim Integrated in mid-July, I believe it was, when you yourself had updated the in the chat room. So there could be some guidance from there that's coming, especially if they provide good synergy guidance that could help the stock itself as well. What do you think?
Yeah, so the August 12th call option that you saw took off, they're actually, you can see them in the Jaguar scan as well. And it was before that on July 22nd as well. They were buying December 125 calls, and then they returned, and then they were buying more shorter term September 125 and 130 calls. Very bullish, 97% bullish bias according to Jaguar scan going into earnings. I will mention this, that there are two companies in the semi sectors that recently I've seen some analysts, as well as just my own observations, have been with a view that these are rather off the radar, large cap, well established, may not be hyper growth as AMD, for example, or Nvidia, for example, but they are trading at very reasonable valuation that are sort of starting to catch up with the momentum that we have seen in the entire semi space. ADI is one of them, which is a very widely owned stock in the hedge fund community. And then also the next one is Broadcom, AVGO. Steady, strong, very well diversified companies. They basically sell their products to 10 different kind of industries, so broken out. Don't see a lot of volatility from one quarter to another when earnings reports comes out. So the theme here isn't going to be something driven by like what we have seen in AMD, which is taking market shares, which is getting into gaming, which is benefiting from the GPU sales, and the gaming sales that are coming out with the consoles coming out, or Nvidia NVIDIA, which is specifically driven by one or two major themes. In these big cap stocks, well-established name, it's more of a general idea or general consensus over how the economy is doing and whether the overall capex environment for semis is improving or decelerating and such. And I think that's where these two stocks fall into the category, particularly auto cycle, which is also large part of both of these companies. I like the name. And I think as long as this thing continues to hold $110 support, I think there's reason to continue to like it. I have seen some previous upside bullish call option activity as well. We'll take a look, see if there's a play going into earnings. Interesting stuff. All right, thank you everybody for joining. Always as usual, good stuff. See you in the chat room shortly.